Thank you. I want to welcome all of you to this earnings call for Cartrade Tech. It's been an extremely exciting quarter for us, where, as we've earlier announced, acquired OLX's business in India. And obviously, we're very excited about the future potential of that business. Some of the things we talked through today and compare some of the numbers, they may not be all comparable just because there's been 50 days of OLX's operations in our financial statements. But we'll try and clarify, through multiple, reports, try and clarify all of this to you. So, once again, thank you for joining. I want to go straight on the presentation we have shared to, page number 5. I just want to highlight, we've seen a 44% growth in revenue in the quarter, and our profit after tax has gone to 132%. We continue with the number one portal in India. We're also now, one of the leading classified businesses in India. 70 million MAUs per month and monthly active users across OLX, Carvale, and other platforms of ours. More than 100 million downloads. So it's a really, all our platforms are strong brands. And the great part about all these 70 million MAUs, 90% is organic, which means we pay very little marketing costs to bring these users on board. A lot of it is just brand and, brand and relevant search. We have 350 physical locations now after the OLX acquisition. So Automall, AdShore, and OLX stores make up these 350 physical locations. 1.2 million vehicles, at a run rate of 1.2 million vehicles we auctioned through last quarter. Revenue jumped up, of course, to 148 crores in the quarter. And this is net revenue. This is not GMV or turnover. It's just net revenue. EBITDA is about 32 crores for the last quarter. PAT is about 13 crores. And we continue to be strong, had a strong cash balance, almost 700 crores, and of course, debt-free. If you go to the next slide, which is slide 7, which talks about consolidated results till September 23rd, this is including OLX. So the growth for the first 6 months is 32%, and quarter-on-quarter is 44%. Of course, there's some OLX numbers in there. EBITDA for the 6 monthly is 30%. Quarters is slightly muted at 4%, but there's some OLX numbers in there as well. PBT is up 78% for 6 months and 13%, for the quarter. And again, that's a factor of some OLX-related costs there. And PAT is up 132% versus 200% for the 6 months. So that's slide number 7. If you go to the next slide, which is really without OLX, and looking at the 3-month and 6-month performance, revenue has been tough at about 9 to 10% in the 6 months or 3 months, and that's been on the back of Shriram Automall, the remarketing business, having a flattish period, as we've been, talking about in the earlier calls as well. So the net revenue has grown 14% 6 months, 9% quarter-on-quarter. Adjusted EBITDA is up 31% 6 months and about 6% quarter-on-quarter. And in that there has been some cost related to our diligence of OLX as well attached in the quarter, and therefore the EBITDA is slightly lower. PBT is up 26% and 88%. And of course, PAT is up 164% and 218%. So all in all, Carvale or the consumer group has seen some level of growth. Shriram Automall has been slightly muted. The growth has been flattish. And the OLX numbers that added in the quarter are showing a largish growth for the business. If you go to the next slide, which is standalone results for the quarter and for 6 months, which includes mostly the consumer business, so Carvale's business. 6-month growth is about 25%. The net revenue from operations for 3 months is 22%. EBITDA is up 55% for 6 months, 9% for the quarter. Again, you've got some costs, one-time costs built in or related to diligence on the acquisition. The adjusted EBITDA, we take out other income, has gone up 26% and 51% for the 6-month period. If you look at PAT is up 36% and 146% for 6 months. If you look at the PAT of 36% on a standalone basis, I think a big factor here, the growth would be even higher, is because last year there was a 6 crore internal dividend from Shriram Automall to Cartrade Tech, and that's in the comparison is showing 36%, will be much higher if we normalize it for the dividend. It comes to almost 1,000% growth in PAT. So That's the standalone results. The next slide is the remarketing of the consolidated results of Shriram Auto Mall. And that's where you see 2% growth in the quarter, minus 3% for 6 months. EBITDA is also 3% growth for the quarter and plus 6% for 6 months. Overall, flattish PAT and PBT slightly down, but flattish PAT is down 3% for the quarter. This is really the concern for us still, where we feel now, you see the quarter revenue and quarter EBITDA seems to have bottomed out, from the last 3-4 quarters. Even here, where we talk about the repossession business coming down. In fact, the repossession business has now come down to a share of 48% from 57% last year. So 48% of the business is repossessed, which was 57 last year. So from 57% of our total volume, the repossessed only is 48%, and our retail business has gone to 38% from 31%. So as our retail supply to Shriram Auto Mall goes up, the repossession business is coming down. If you go to the slide on OLX, and I want to spend some time here, as we discussed in the call earlier, when we acquired Subek Auto, which owned OLX's classified business and OLX's C2B transaction business, we bought two businesses within the same company. The classified business, in the last quarter has shown a revenue of 23 crores, but this revenue is only for 50 days, and a profit or a profit of PAT of 10.6 crores. So it's a high margin business for us. And as I said, this is only for a 50-day period. On the other hand, the C2B transaction business on a revenue of 12 crores has shown a loss of 13 crores for the same period. So the classified business showed a profit of 10 crores. The transaction business showed a loss of 13 crores. As you may have read in our public announcement and statements a few weeks ago, and as we even talked on the call earlier, we have now, in the last 2 weeks, shut down and scaled down the transaction business. And obviously, therefore, in an attempt to do two things. One is focus on the classified business. We remain extremely optimistic about, which brings in all those 35 million unique users per month and has a strong presence in the market for used cars to other products and goods. And therefore, classified business is something we want to continue to invest behind and back. And we have scaled down or brought down to zero the C2B transaction business in an attempt to obviously bring down the loss-making part of the acquisition. This has already been initiated, and we believe in this quarter it will be completely be done. In order to bring it down or close it, there may be an approximate cost of 25 crores, one-time cost to to shut down the business. And I think what would the normalized business or the normalized financial of the business will really come in from the Jan to March quarter after this one-time cost has been incurred, where the classified business and its unit economics and the growth from there will continue to work. So I think this is something which we've indicated in the past and now completed in the process of completion. And therefore, this acquisition, which had two parts of it, the classified business and the transaction business, will now only have a classified business, and which has an automotive side to it and a non-automotive side. And we're extremely excited about both those businesses, which will continue to now, which is what we'll continue to invest behind and grow. Obviously, as you can see in these numbers, this is the profitable side of the business, and the intent was to bring down the losses from the loss-making side of the business. As I said, by December end, this action should be complete. Also, what we indicated in the last call was that we have a one-time tech cost of approximately 10 crores per month. We had indicated that it might take us 6 months to do the entire technology transfer. It is part of our purchase contract to get the entire tech transfer over a period of 6 months. We feel that today that is likely to happen 3 months before schedule, and rather than incurring a 6-month cost of 10 crores per month, which is again one time, it will be only for 3 months. And therefore, from January, our tech costs will also dramatically come down. So we feel good about the fact that the losses of the transaction business, where we incurred some one-time costs this quarter, the October to December quarter, would come down in the Jan to March quarter, as well as the one-time tech costs which were being incurred from October to December will probably not spill over to January and only be 3 months. So these are two major points of announcement on the acquisition. As we continue to look at the acquisition, work on it with the teams there, we seem even more excited about the acquisition from what we were when we assessed it. So we continue, as I said, we continue to invest in the classified business and continue to grow it. I want to add here that within the Sobak Auto acquisition, the classified side has a huge used car part. As you all know, Carvale is the other used car classified player in the country. Carvale, of course, as you also know, is 84% new and 16% used. And OLX's used car side is very, very significant to the entire used car industry here. So we feel really, really excited about the whole OLX classified business. So this is, on the next slide you have Google Trends, and as it shows, Carvale continues to be well ahead of its peers. We've also this time given Google Trends versus its other competitors quicker, and you can clearly see where OLX stands 68-1, clearly having a leadership in the whole classified space, automotive and non-automotive. So, this is what I wanted to highlight. I'm happy to go into a Q&A or a question and answer session to elaborate or clarify any doubts on the financials or the acquisition of OLX in India, and solve all your doubts and questions.
Thank you so much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sachin Dixit from JM Financial. Please go ahead.
Yeah, Vinay, congrats on closing the acquisition so quickly and also deciding the future of transaction business. Quickly, I wanted to understand in the P&L that you have shared for OLX, where is the product and tech expense parked right now?
In the last quarter, we didn't have this global product tech cost till September, and it was very minimal, and therefore there was a very minimal cost. As I said in the last call, it will come from 1st October, and we actually originally anticipated it will be 10 crores a month from 1st October to 1st April. But because of the progress we made, we believe it will only be for 3 months. So it is not really there in the P&L we shared because it didn't exist at that time. It's not there in the last quarter.
Understood.
It's very minimal. It's very minimal amount. So it's not significant.
See it in this quarter, and then it should die down.
Yeah, it'll be a one-time 30 crores this quarter, and so this quarter with 30 crores of tech costs and some shutting down costs is going to have 2 extraordinary items. But yeah, from 1st April, the acquisition will be absent of course, the one-time shutting costs, as well as the tech costs will come down dramatically from there. And I wanted to add here that although we clarified this earlier, that when we acquired the company for a consideration of 523 crores, some of these things were known and were almost considerations made at the time of purchases.
So I think you meant from 1st January there will be no tech cost.
Yes, we originally thought it would be till 1st April, but now it's probably 1st January. Yes, sir.
And the 25 CR one-time cost that you just mentioned,
yes.
Does it include this tech cost or it's on top of it?
No, it's not. The tech cost has nothing to do with this. So the tech transfer cost and tech migration is on the classified business and the transaction business. This one-time shutting is just shutting the transaction business. I mean, it's various contract terminations, etc., etc.
And any inventory losses or anything that might come up because you might be liquidating some of the vehicles?
This all is in that 25 crores we've ascertained to you. It's all in there.
That's all accounted for there.
Right.
Great. Yeah, sounds good. Just one more question on the piece of remarketing business, right? Obviously, you mentioned that it looks like it's bottoming out. You might have seen some data for the last 1.5 months as well. Where do you see that tracking? Secondly, when you say retail for the marketing business, does this only have individuals, or this is just anyone who is not an OEM or a bank?
Yeah, sure. So the repossessed business, to be honest, is last quarter has been flattish over the previous year, right? A little bit. So what's clear is that it's bottoming out, but it's not clear it's growing. That is the difference. And whether it takes 1 month or 3 months or 6 months is hard for us to predict at this stage. It's just that it seems like the asset quality of people lending in the automotive sector is just good. It just seems like that. Now, is that a reflection of the industry at large? Is it a reflection of India as a country at this point? It's hard to tell, but that is the reality. So we've actually focused a lot on going to the retail side, which is the second part of the question. And that supply comes from individuals like you and me. It comes from, small operators. But it's basically, most people, at one vehicle being brought in at a time. Not like an institutional client which may give us 2,000, 1,000 or 500 vehicles a month. Not like that.
Sure. Just one final question on the OLX piece again. Is there any color that you can provide on the historicals? I know you guys have provided for this quarter for which you have consolidated, but we don't have any context here.
Sorry, you mean historical on what? I can, but what historical what?
Of OLX business, like how did this business do in the last year, whatever period you can provide.
So we've actually, the numbers we've given you in the first two months, and we've also given some rough run rate projections of the business in July, right, when we acquired the company. The classified business, roughly at that time we had given you, clocks about 170 to 180 crores revenue a year. With a standalone, without tech built-in cost of a profit of 100, 110 crores. And that's just been the historical way it's been. What we want to do, obviously, and then there was the transaction business, which had a net revenue about 100 crores, a little more of that, and a loss of 100 crores, right? So, and then there were tech costs below this. Now, what we've tried to do is say, listen, it's really hard to fix the unit economics of the transaction business, and therefore we're willing to forsake that 100 crore revenue, and the 100 crore loss goes with it, right? So, in a way, it leaves us in the classified business with a profit. And to be honest, that's one of the reasons we acquired the company, because we're really excited about the classified business, and within that classified business, a very large part of it is used cars, right? Which is what obviously, there's huge synergy for us as a business, which affects all our other businesses as well. Now, what is over and above that is there's going to be some tech and corporate overhead which will come into the classified business, which was being charged to the transaction business. And a lot of this will get normalized on the January quarter, because in this quarter we've had two one-time costs, right? This tech transfer cost, which is completely to do with transfer of during the tech platform due to the acquisition, and the one-time shutdown cost of the transaction business. Does this answer your question?
No, I basically wanted color on previous years, right? So just for how the business done historically, that's what I meant.
So some of this is hard for us to get, because we actually bought the classified business in a business transfer contract.
Mm-hmm. Yeah. Okay, sure. Thank you.
Thank you.
Bye.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1 on your touchtone telephone. The next question is from the line of Vijit Jain from Citi. Please go ahead.
Yeah, thank you. Hi, Vinay. Congratulations. Looks like decent growth across core businesses, as well as congratulations on the OLX deal again. My question is, first, I'm just curious, was this always the plan when you were acquiring the company to, take a hard look at the used car business and shut it down? And was that, I'm just wondering, was that something that came from process that you had to consider or buy both the businesses together? That's my first question, and then I had a couple of other questions.
No, I think when we bought the company, we looked at the classified business, which we were really excited about, and it had a used classified side, which was hugely synergistic. And then they had this consumer-to-business transaction business, of course, loss-making, but they were pretty good at it in terms of customer experience and many other parameters and metrics. For us, when we bought it, we obviously had 2-3 choices. One is to buy it and fix it, the unit economics. Second is scale it down and bring down the losses. And third is shut it. Right? I think we we did think of all these three things over the last 3, 4, 5 months. Eventually came to the conclusion that this is going to be hard to fix the way it's run now. Not to say here we're not running a C2B business. It's just that we don't want to run it the way or follow the processes which are being followed in the past. We still think there's a huge C2B part in India. The consumers want to sell cars. And I don't know whether you know, but OLX is it is the largest platform which car sellers use to sell their cars, even today on the classified side. Millions of people list their cars every year to sell on OLX. It's the number one platform for car sellers. What we could not fix is the C2B auction model, right? Which is auctioning these cars out. We continue to be in the C2B business and even C2C business in the classified side. As time goes on, we will look at how we can continue the C2B business in a different form. It's just that we didn't think that this model, the unit economics, would be fixed at all. And actually, this is not just us. It came from the team at OLX too.
Got it. Understood. And Vinay, my next question is, it's a slightly different variation of, I guess, what Sachin was trying to ask. But just trying to get a sense of what the underlying growth in this classified business is for you. Like you give these metrics around users, unique visitors and engagement and those kind of things. What kind of metrics should we expect to see on the OLX side of the business and the growth trends? And I also have a question that I would like to ask on the margin side, but maybe if you can answer this first.
Yeah, perfect. So for us, when we looked at the business, and OLX has had the classified business. I don't talk about transaction business growth because it may not be relevant anymore. Even though it had rapid growth, it may not be relevant anymore because it doesn't exist now. When you look at the classified business, it had reasonable growth in revenues, high growth in profitability over the last 3-4 years. As I said, these numbers is a BTA, so we don't have all the facts of it. But since it was transferred, it was sold in a business transfer contract. This is one part of it. The second part I want to highlight here is we remain extremely excited about the used car classified side, which we believe we can keep growing over a long period of time. OLX being the leading player in the country. OLX has got multiple other categories like real estate, electronics, mobile, two-wheelers, which also we're extremely dominant at. There's actually, if you want to sell something in India, outside OLX are almost no other platforms in India. So we feel there's a huge monetization opportunity. And that's got nothing to do with the past. It's just what we believe about OLX, right? A revenue of 180 or 190 crores of classified revenue. We believe there's a rapid growth capability out here itself. But this is one part of it. The second part of it is, I think, when you look at Carvale, Samil, both the companies, they tend to grow over the last few years about 20%, 25%. Net revenue and profitability is maybe slightly higher. We believe that now we've bought something which is almost 40% of our size, right? Automatically. So in a way, if you look at the revenues of the business, it goes up by 40% automatically on day one. Our question now comes around that there's going to be some focus around the unit economics of the business and the margin structure in the business as well. So not only are we saying that OLX will help us grow revenues, which it already has and will continue to do so by growing itself as well. Samil will go independently as well and so will Carvale. But we also believe that the combined unit economics should get better and better every day. So it's like almost growing OLX, growing the combined entity, growing just because of the acquisition and OLX's growth and Carvale and Samil's growth, and then getting the unit economics and margins to improve in all these businesses. And OLX's nature of business is very similar to Carvale, where increase in revenue does not lead to real increase in cost. The metrics to measure would be things like traffic, of course, related revenue, EBITDA, profits, all the same metrics we always declare for Carvale. Very similar businesses. One is just a horizontal and one is a vertical business. That's it.
Correct. And Vinay, my last question is, in the classified financials that you guys have shared, I can see the adjusted EBITDA margin is 47%, and you are reporting 11 crores of profit for the 50-day period. Right. So if I'm just going to be a bit approximate, maybe 8-9 crores of EBITDA on a monthly basis versus the PDT cost that you say you will incur of about 10 crores per month in the next 3 months. So I'm just trying to wonder.
This is actually, and I'll explain this why. This is only because the tech is being operated in a global OLX platform, not in our own environment. that transfers on 31st December. And therefore, it's a one-time cost. Actually, it's supposed to be 6 months, it's down to 3, which we're committed to incur as part of the purchase transaction. It doesn't mean we'll incur that cost tomorrow. That's my understanding.
Yeah, so my question, Vinay, was what should we think of as more run rate once January comes? Is the margins in the 20% handle, you think? So 10 crores of EBITDA minus, say, 5 crores of PGT in your own hands, and so you get like 20% handle on margins? Is that how we should think about it?
I'll be honest, it may take some time, the full transfer. We do anticipate that there are two things which will happen. One, the PDT costs will come down dramatically, I would think. Probably between 30 and 50%. It's probably 40 to 50% of what they are. Number one. It's hard for the estimate because that transfer has not fully happened. And the second thing which could happen is that there is some corporate overload or overhead going to come here because they were all sitting in the transaction business. We want to continue investing. See, if we were not looking to invest in OLX classifieds at all, then what the arithmetic would be this. But we want to make sure there's a vibrant product tech team, management team, adding to the team to make sure this run rate revenue grows at a rapid rate. We don't want to keep it dormant. We believe in this business. And so there is some investment in overhead which we'll do in this business. But that will be, the overhead will automatically start paying for itself very quickly. It might take 2-3 months, but very quickly start paying for itself. Not that we anticipate losses at all in the next quarter, but the profit might be a little more muted than you think it is. That's what I'm saying.
Got it. Thanks, Vinay. My last question overall.
In the very short term, yeah.
Got it. My very last question, Vinay, if you can, from an overall company perspective, give some color on product roadmap, product development plans in the next 1 year post this acquisition. Not just for OLX, but also for Carvale and everything. And related to that, I suppose the auto cycle seems to be recovering. Are you seeing signs of that in your own business?
I think the auto cycle is recovered. I wouldn't say recovering. But to be honest with you, I think our focus, when I'm just looking at OLX as well as Carvale. Carvale is 84% new, 16% used. OLX is 100% used in everything. And out of that 100% used, almost 45 to 50% is used cars. For us, our number one focus here, between Carvale and OLX, we have a very high share of used classified business. Our number one objective on product development and capability is really to start growing the used classified business on both sides, Carvale as well as OLX, and product related to that. So on the Carvale side, we've always said we're trying to get closer to the transaction, more on moving from a place where you can just find your car and select your car to really buying a car. And that development is underway and continuously making improvements on that on every side. I think on OLX too, I think we're going to go and invest in product capability, not only used classified side, but OLX is very, very strong on two-wheelers and electronics and mobile phones, real estate, etc. And start looking at those categories to have disproportionate growth in them as well. So, right now, as I said, we're setting up these product teams in OLX. There are about 44 people in the product team right now. They're still setting it up, and once the tech transfer is done, we should have a good product team out there which starts building differentiated cutting-edge technology for OLX for many, many years to come.
Got it. Great. Thanks, Vinay. Those are my questions.
Thank you. Thank you, Jay.
Thank you. Ladies and gentlemen, if you do have any questions, please press star and 1 on your touchtone telephone. The next question is from Siddhartha Bera from Nomura. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity.
Hi, how are you?
I'm good, sir. Specific greetings to you and the entire team. Sir, I just wanted to check on this improvement in the unique visitors we have seen in the quarter. It's been quite a good improvement compared to the last quarter. So, any thoughts what is driving this, and given this backdrop, do we expect that the revenue growth trend which we are seeing in the standalone business of close to 22% for quite some time now, that can have some upside here also as well in the medium term?
Yeah, the growth rate seems to be this for the last few quarters. The last year was much higher, but generally this is the growth of new car Carvale, which is 84% new cars. I think what I said earlier is we feel that actually the new car business has been pretty strong in the first 6 months of the year across the industry, and supply seems to be good. In fact, there was a period a year and a half ago where supply was lower than demand. Today, supply is good and demand is as good actually. So it's a very good place to be in the new car industry for everyone, including us. There are no shortages as such, but at the same time, demand is pretty good and supply is pretty high. I think this trend is probably going to continue for a while. Where we see and where we are focused on and might take a few months is really the used car side of Carvale and the used car side of OLX, where we see a lot of positive growth and is what we're working on. I come back and the used car industry has been very buoyant as well. We really see that, Carvale's numbers on the used car side as well as OLX numbers on the used car side going up.
Got it. And second is on the synergy side. So I understand on the cost side, but on the revenue side also, do you feel there will be some synergy which we can sort of derive post this acquisition or transition of the OLX into our system? And what are the areas and how much can that go up to?
The main synergy is the used car business, right? Because that's where the overlap exists. And again, as I come back, we basically see whether you can add Carvale and OLX and give a much stronger product out to all the dealers in India who use classified products. And that's where we see the number one synergy between the two companies. But we just see a significant upside in the next year, 2 years in this business.
Got it, sir. Thanks a lot. I'll come back later.
Sure.
Thank you. The next question is from the line of Payal Shah from Billion Securities. Please go ahead.
Hi, sir. Thank you so much for the opportunity. So I have two questions. One being on the remarketing business. So FY23 was a year of degrowth for the auction business on the back of multiple factors like Mahindra incidents, higher ASP for used cars, etc. So I just wanted to understand that, H1 FY23 has been relatively flat. So how does the remainder of FY24 and 25 look like for this segment of the business?
Actually this 6 months has been tough, and I think it's a lot has been due to the fall in the repossessed business. I think there's also been growth on the other side of the business, because whatever fall here has been made up by the retail business and other businesses. We are hoping that things turn around, probably in this quarter, the next quarter, because the repossessed numbers seem to have bottomed out. And as I said in the previous calls, that even though the repossessed business is down, we've made a lot of efforts elsewhere. And when the repossessed business does come back, whether it takes 3 months or 6 months, we'll be a much stronger company. And I think we keep saying that. So I don't want to give any growth guidance, but we do believe that, the next 3 to 6 months, Shriram Automall will be in a much better place than it is today.
Okay. So my next question would be Carvale has approximately 35 plus million monthly unique visitors, which is similar to the average visitors on OLX. So what is the number of visitors we aim to get once the two platforms come under one umbrella? Since there will definitely be an overlap between these visitors too.
So there's no intent to bring them under one umbrella. OLX.in and OLX, the app, will continue to function as they are. Carvale and its products will continue to function as they are. Many people come to Carvale, as I said, 84% people come to Carvale for new cars. 100% of people come to OLX for used products. So the users or the consumers or people who come for different reasons. Like someone like me and you might go to Carvale to buy a new car, and someone like you and me will go to OLX to buy a used car or sell a old car, or even buy a refrigerator or sell a refrigerator. So it's just the different platforms and used by different people for different purposes. But as I said, the engagement metrics are different. The methodology of acquiring is different. 70% people coming on OLX comes through an app that they've downloaded on their phone. And they use it for multiple things. They use it from selling a car to a two-wheeler to buying a sofa to different reasons. Today, someone's moving houses and they want to sell 3 items in the house, whether it's a computer or a sofa or a refrigerator, they'll go into OLX. So, OLX is a very different place in the heart of consumers. And Carvale is a different place. If you want to buy a 10 lakh rupee new car, you're going to go to Carvale for that. So both are going to function independently and both have to grow independently.
Okay, that's quite helpful, sir. Thank you so much for the opportunity.
Thank you.
Thank you. The next question is from the line of Pankaj Bobre who's an individual investor. Please go ahead.
Hello.
Hello, sir. Pankaj?
Hi, Pankaj.
Hello.
Hello, Pankaj. Can you hear us?
Yeah, I can hear. Am I audible?
Yes.
Okay. Congrats for good set of results.
Thank you, Pankaj.
And season's greetings to you and your team.
Happy Diwali to you as well.
Thank you. Just wanted to understand, we are closing down the C2B business, which had gross revenues of 194 odd crores and net revenues of 12 odd crores. So, and we have paid around 500 plus crores for the whole business. So, did we not overvalue the business at the time of purchasing it?
No, we don't feel that, because in our estimation of valuation, we have factored many of these things into account of the transaction business and the classified business. So we actually feel that when we valued it, we arrived at fair value, keeping some of these considerations in mind.
Okay. Now, when we are closing it down, are we?
Go ahead, Pankaj. Sorry. Hello.
Pankaj, are you there? Unfortunately, I think he's having some issue with his line. So, if you do have any questions, Pankaj, and if you can still hear us, please do come back in the question queue. Ladies and gentlemen, again a reminder, if you do have any questions, please press star and 1 on your handset. The next question is from the line of Yug Mehta from AP Capital. Please go ahead.
Yeah, thank you for the opportunity. I have a couple of questions.
Sure.
My first question would be on Offshore and Signature outlets. In the last call, we mentioned the number of outlets being 120 plus. What is the number of outlets now, and how do you see this ramping up?
Yeah, I think this is a similar number. I did stress that we also have now over 100 OLX similar kind of outlets. So we actually doubled our stores already. In the next month or 2 months, we're working out a strategy around, the 110, 120, which are the Carwale, and the 110, 120, which are the OLX, and figuring out what we should do with a combined 230, 240 stores. So one of the things which OLX has done is given us a lot of reach and distribution as well through these stores.
Okay. Owing to the acquisition of OLX, a significant portion of our cash has been deployed. Thus, other income will significantly be lower. So, by when do we expect the returns from this transaction to cover that shortfall?
No, that's a very good question, and we're all sensitive. We've lost a certain amount of other income, which is obviously because we've deployed a large amount of cash in the transaction. We do believe that it'll take some time, but definitely in the short to medium term, the OLX will more than compensate for the losses we have in interest income. But we do feel conscious about that.
Also, what are the company's plans for the remaining 600 plus crores on the book? Any other acquisitions in store?
At this point, honestly, we are just looking at the consolidation of OLX, the tech transfer, the growth of the classified business, the integration with our current businesses, and growing our current businesses. If something did come up in the future, we look at it, but at this point, the whole focus is on, getting this right.
Okay, that's all from my side. Thank you.
Thank you.
Ladies and gentlemen, a reminder again, if you do have any questions, please press star and 1 on your handset. The next question is from the line of Sachin Dixit from JM Financial. Please go ahead.
I had a couple of follow-up questions. So the first one being when the plan, at least that the communicated plan was that we will have OLX transactions as well as classified. Then also you were saying the product and tech expense will fall by 40 to 60%. Now that transactions have gone, I was expecting maybe a sharper drop in that expense. But even now you are saying 40 to 50% decline only.
So, it's possible, Sachin. What you're saying is correct and it's possible. It's hard to assess at this point. but it is possible.
All right. Secondly, on the 110 odd OLX stores, I believe those are part of OLX Autos again, the transactions business. So when you are shutting it down,
that is part of the classified business.
Oh, that's part of classifieds?
That's right.
Okay. Sure. On the OLX classified piece, right, now, honestly, there is a lot of competition in the non-auto portion of OLX, right? I mean, mobiles and all maybe, but I believe last time you guys mentioned 15% of the revenue actually comes from real estate. Looking at the number of real estate portals that exist in India, like how much sustainable or how much moated is the other revenue on OLX other than autos?
So, of course, auto, there's a very high level of market share and relevance to the used car dealer today. You talk to used car dealers, they'll tell you a large part of their sale is OLX dependent. The other categories, in fact, the main categories I'll talk through, one is mobile phones and electronics. I don't think there's any other verticalized or horizontal player which is able to cater to the millions of people who come onto this platform to sell their mobile phone or electronic device, right? Whether you're a consumer or a dealer. So very large amount of their traffic comes from sellers of mobile phones and electronics. The third category they've got is two-wheelers. Again, very, very high percentage of users sell their two-wheeler on OLX. And again, consumers and dealers as well. So, and people want to buy these products, whether electronics, mobile phones or two-wheelers need to come to OLX to get them. There's just another supply source available. So yeah, whether it's used cars, mobiles, electronics and two-wheelers, this is more or less a situation. When you come to something like real estate, which is another reasonably strong category for them, there are two types of real estate, advertisers. One is the user, like you and me, who've got a flat to sell or a property to sell, or which is like a resale, which is almost not like a new development. OLX is only on the resale side today, which is existing homes being sold. A lot of the other real estate sites are on new developments, which is new developers advertising. It's almost like Carvale is on the new car side, the new other websites are on the new development side. OLX is 100% on the home side, which is my house and your house, single home side. And on that side, they've got reasonable market share and strength. That's where their strength is. So, its segmentation is different, but I'll just try to explain all these categories and talk you through what OLX's strength is.
And my understanding was even for secondary sale and rental also we have decent number of portals. But anyways, moving on the monetization piece for OLX Classified. My guess is most of it is coming from either a used car dealer or a shop owner or people like those. How much would the breakdown according to you will be between individuals like you and me versus someone who's running a business out of it?
Clearly on the car side, the breakdown is evident for us because they'll be computed. When you come to mobile phones and fragmented supply, it's hard to tell who's a user and who's a dealer, right? It's very hard because you can run the platform and pay and list. But if, as I said, on the car side, a significant part, I would say 75-80% is from dealers. On the other category, it's very hard for us to comment at this time how much is users and dealers. But on either side, we've seen from the platform, the traction is fantastic. And there's a lot of opportunity to improve monetization and performance for the users. I mean, from the users and for the users. I think it's a massive, massive opportunity across categories, not just cars.
Sure, those are the questions. Thanks so much.
I think we've given some numbers out earlier in our list, but they get 35, I need to correct me if I'm wrong, 35 million listings a year.
Yeah, I have those numbers. It was just on the monetization.
You look at the number, right, and you say, my God, 35 million.
Yeah.
That's a very large number.
Thank you so much. The next question is from the line of Sanjay Sood, who's an individual investor. Please go ahead.
Thanks for giving this opportunity to me.
Hi, Sanjay.
And hi, and congrats, Vinay.
Thank you.
I just wanted to understand what is the ROI period for this acquisition?
What is the ROI? Sorry, what is the ROI?
Return on investment.
At this point, immediately at this point, it's hard to quantify ROI investment. But when you look at the ROI investment over a long period of time, we believe, obviously we have our own hurdle rates in the company of what return it should give the parent and then, of course, to shareholders. But we believe that with significant value creation for Cartrade Tech and, of course, Cartrade Tech shareholders. OLX is, if you look at the multiples of the valuation in terms of revenue terms or even any other term, it's a reasonably cost acquisition. And we do believe that the amount of synergy it adds and on its own feet and own strength is going to add tremendous value to us over the next 3 to 5 years.
Okay. And one request from my side.
Sure.
If you can provide used car sale data on monthly basis, like what basically major OEMs are providing this data, since you have grown big now and becoming bigger, hopefully.
Sure.
So it will be making some sense for all of us to understand we are moving in big direction.
I understand. So since we are a classified platform, what we currently provide an auction platform, we provide sale data on the used vehicle side. But here on the classified side, we'll try and provide some other proxies so that you get a good idea of the used car business and its metrics, if that's okay.
Okay. And then last, just wanted to understand, you have closed down the C2B business. What exactly it used to do? Because I have not understood this at all.
Sure. What it did was, if you list your car on OLX and, millions of people a year list their car on OLX, a small percentage of them wanted to auction their vehicle to dealers. So what they had done was built a electronic exchange where what they would do is first they'd come to your house and inspect the vehicle, and then they would auction your vehicle to a large number of dealers in India who would bid for it, and then they would pick up that vehicle from you and give it to that dealer and make their margin in between. I think that was the model. We just found that the whole cost of operating it, first of all, the very few percentage of OLX customers wanted it, but more than that, we found that the cost of inspecting it from you, collecting it, delivering to a dealer, and the margin made in between, the unit economics was very broken. That's what we found.
Okay. So, it is not like Shriram Auto Mall business.
It is actually the auction business. Shriram Auto Mall is similar, but Shriram Auto Mall is actually got very high scale in what it does, and it's got its own location. So it doesn't go to your house to inspect, but people bring in vehicles to their physical locations for auction. So it's slightly different. The business is similar. The execution of Shriram Auto Mall is far more efficient.
Okay. Thanks. Got an answer.
Yeah. Thank you.
Thank you. Ladies and gentlemen, a reminder again, if you do wish to ask a question, please press star and 1 on your touchtone phone. The next question is from the line of Vijit Jain from Citi. Please go ahead, sir.
Yeah, thank you so much again.
Hi, Vijay.
I have two questions. So one, just looking at the standalone revenues and P&L this quarter, right? So your adjusted EBITDA excluding other income is about 6 crores. And if I remember right, there's 1 crore of provision for the due diligence stuff done here, right? So should we think of the adjusted EBITDA excluding other income sustainable number here as 7.3 crore roughly? That's again a pretty decent jump YOY QOQ, and I can see your costs, if I look at it in that lens, have been fairly controlled. So just your thoughts on whether that's a sustainable thing.
Higher? I just want to check. I think it's 1.5 crore, but I'm not 100% sure. Anisha?
Half year is 1.5, and I think
it's 1.5.
For Q1 we had said
correct.
0.5.
Yeah, but that would probably be correct. The answer that probably be correct, Vijay, then.
Oh, okay. So the due diligence cost was in 1Q, and so it's not a part of 2Q expenses. Is that what you're saying?
It's both. It's in both, I think.
I see. Okay, got it. And the second question I had was just wanted to understand what do those 100 OLX outlets do for the classifieds business? Are they similar to the Appsure in terms of model and how it works?
Yeah, it is quite similar. I think the way Appsure works with Appsure is a little more refined, where Appsure was created so that you could buy a vehicle online on Carvale, and the back-end services of the product and service of exchange, warranty, and the money back, and all that could be under the Appsure store. So it was created to enable a whole digital environment to your purchase. I think what OLX did is it had a very premium dealer whom they certified to be an OLX auto dealer, and even though it didn't offer the money back, they offered the warranty, but even though they offered the money back,
and the online experience, they made it into a curated marketplace within OLX, the classified business, and kept growing it out. So these are almost differentiating, where they almost adopted these dealers. Again, it's an asset-light model, franchise, dealer-owned, dealer-operated, dealer working capital, dealer, fixed assets, etc., etc. So very similar. It's just that our vision was slightly different, where we wanted our stores to be really looking at the next phase of our growth, a few years from now, where if you and I want to buy a car online, then these are the stores which will be able to do this get this entire experience completed in a particular way. They did this with the view of giving a high-quality car to their user. I think that was the intent.
Got it. Understood. And the second question, just on the OLX part. So I would imagine, and when I look at the app charts, for example, I can see that OLX usually is among the top 10, top 15 apps on both Android and iOS. So is it safe to assume that most of the traffic for OLX comes from the app versus
70. The Carvale is the reverse, actually, 70, more than 70, yeah.
So 70% for OLX is apps, while 30% is apps for...
Carvale would be like about 25-30, maybe something like that. It's probably a little bit of reverse. I think that's also partly because OLX uses for multiple purposes. Carvale is like a high engagement, one time, like buying a car is like one time, so it's a little different. The usage is different.
Yeah, and so with related to that, so obviously in addition to, getting a much bigger scale in the used car business, you're also getting a much bigger play in mobile apps space with this. My question is, is there anything from the ad tech products that OLX has built that you think you could use in Carvale? Any thoughts on those kinds of things?
Yeah, a lot of cross-learning, very, very early days, but lots of cross-learning on programmatic ad selling to, AI to, there's just so much learning between the two teams. But as I said, it's only, I think it's day 90 today, exactly day 89 today actually. So it's just very early days and a lot of time went in tech transfer and then the shutting of the C2B and all of that. So, now is really the time for us in the next, probably 30 to 60 days to be able to put in these processes in place where people can continuously learn from each other on many of these issues.
Got it. And because I asked also that also because I'm just wondering, you mentioned that those product development costs will go down by 40 to 50%, possibly more. In general, for India Internet, when companies build all these different kinds of products, ad solutions and whatnot, etc., it's usually pretty expensive to build those, right? So, from a continuing to support the product and building new products, how confident are you that you would be able to do both?
Very confident. Very confident the cost reduction.
Both cut costs as well as product development.
Yeah, definitely on the tech cost and the product development cost, because currently these costs are being incurred by them globally and they're being charged to us because it's in their environment. It's not completely correlated to what costs may incur in India for this. So I think the first part is the entire team is now part of our team, which is part of the Subek Auto or OLX India team, which is ours, not their team handling it, number one. Number two, all the third parties, infrastructure, etc., created by them is what this platform used. It's slowly moving to our environment of our infrastructure, etc., etc. So it's completely different in my mind. In fact, it's hard to quantify fully, but definitely significantly going to be lower than what it was.
Got it. Understood. Those are my questions, and congratulations once again, Vinay, and best of luck.
Thank you, Vijay. Thank you.
Thank you. The next question is from the line of Pankaj Bobade, who's an individual investor. Please go ahead, sir.
Hello, am I audible now?
Hi, Pankaj. Yes, you are audible now. We lost you earlier. Sorry.
Yeah. Okay, just wanted to understand when we are closing down the CTX transaction business of Subek Auto. So what are we going to do with it? I mean, I understand that the losses which were draining out of them, that will be plugged down rather. But then it would have some fixed assets, which would we be able to salvage some from?
There was no fixed assets in this. I mean, or minimal fixed assets, because a lot of the places where they kept these vehicles were leased properties. And the business was an asset-light business. So it is them auctioning cars on behalf of sellers to dealers. I think the only real asset would be the tech platform itself, which of course we have with us. And we'll see what are the use we can make in the future. And of course, another asset would be the data and some of the IP related to it, which also we'll see what will do in the future. But the intent is to, so I clarified that earlier on the call, the intent is to shut the current way they operate the C2B business. As I said, a large number of people list their car for sale on OLX, which continues. So it's not like we're exiting the C2B business as such. We're exiting the C2B transaction business. So still, someone like you can list your car on OLX and sell it to a consumer or to a dealer, which is happening. Millions of people are doing that every year. A small percentage wanted us to auction it in a transaction model, which is what OLX did, which is what is shutting down. It's not the C2B shutting down. It is the C2B transaction business shutting down.
Right, I understand that. What I mean to say that we have paid, the seller at that time was valuing the whole business, and the valuation was done on the overall revenues, right? So for 523 crores, and a big chunk of that was coming from, 523 crores which we valued for the business, and a big chunk of revenues was coming from this business. So if we are writing, rather that
no, we won't, because when we did the valuation for it, we had factored some of these scaling down, etc., etc. Hello?
You lost him again.
Yeah.
Hello, Pankaj, can you hear us?
Yeah, I'm done with it.
Okay, no problem. All right, thank you. Gentlemen and ladies, due to time constraint, that was the last question for the day. As there are no further questions, I would like to hand the conference over to the management for closing comments. Over to you, sir and ma'am.
Thank you. And thank you for all of you for being here today. I just want to tell you how excited we are about the last quarter and the acquisition of OLX once again. Happy Diwali to all of you, and enjoy your weekend and the festivities ahead. Thank you, everybody. Thank you.
Thank you. On behalf of